Thank you, Jane. Thank you, everyone, for coming. Obviously, a very busy week and a very well-attended lunch. So it's a good opportunity to hopefully introduce Kincora to a few. We're an explorer, but we're doing it in a different way with a different funding model. And we've just announced a relatively unique financing too. So what we are is ticker KCC, dual listed on the ASX, TSX-V. We're looking for big porphyries in central west New South Wales. We have a very strong technical team and operating track record. And with the raising that we've just done, and I'll touch on a little bit later, we have a balance sheet to really accelerate our business model. And it's a pretty different business model on the ASX. It's very much one that's a North American focus. But before getting into Kincora in too much detail and looking to make this a little bit more interactive, I might ask a few questions from the floor. Make sure, if you can, stick your fork or your hand up. For those here who are familiar with the term project generator, and I guess before going into that, probably the best known example of that in recent times is Greatland Gold. Back in the day where Newcrest was funding Havieron's exploration, and it supported Greatland's share price going, or market cap going, from 50 million market cap to 1.5 with Newcrest funding that. So I guess scalable, but who in the room is sort of familiar with that business model? A few, thank you. Who's invested in an exploration play in the last 12 months? Oh, it's a good audience to be speaking to. All right, the last question. For those who haven't invested in an exploration play, would you reconsider that if the downside to that investment was reduced by not needing to worry about the junior coming back and asking for more money, or drilling a portfolio of projects where your risk is mitigated? You've got a portfolio of projects that are being drilled and you've got that upside. So a few hands going up there. Well, I guess that's what we're trying to do at Kincora. We're trying to have multiple shots on goal. We're trying to provide that asymmetric return profile. And we're doing that with this project generator funding model. And that funding model has just been endorsed by Rick Rule and Jeff Phillips, two pretty well-known North American investors. In the brochure on your table, you'll see a link to an investor letter that Rick wrote earlier in this month outlining why he backed the deal and what he likes about Kincora. But in summary, we've done 6 asset level deals so far. That's unlocked over 110 million of potential non-dilutive partner funding at the project level. We've had 5.5 million of that going to the ground to date. And I should say that our flagship porphyry projects are the ones that we're looking to do deals for now. Interestingly, we get a management fee for operating a couple of these earn-ins. We're drilling with Anglo Gold Ashanti's funding at the moment. We've done 7,000 metres there, and we're getting a management fee there. So that's a non-dilutive form of income to the company. Again, looking to address this. How do you keep funding these projects and providing an attractive return profile to shareholders without that consistent concern for dilution? For those that, I guess, have looked at our raising that we announced recently, I'll try and flag a couple of things. A 12-month hold period is pretty unique. That's what we've been able to achieve with this raising. 4 million Canadian warrants that are already in the money that would provide another source of capital for 6.5 million Canadian. And with those warrants in the money and the existing raising we're doing, we're looking at doing some self-funded drilling ourselves at our one Cobar project. So with this, it's a pretty interesting model, one that's not so common on the ASX. For those that think that the story's over from the financing we've done to date, we've already had the backers of this deal, particularly Jeff Phillips, in the market buying stock at 6. At the moment, the raising's done at 3 with warrants in the money at 5. So we think there's plenty of upside to come, and the structure, and the North Americans are very focused on structure, is providing a lot of leverage to exploration success, but also further drilling and further deal flow. So as an explorer, usually you live and breathe by your next drilling update. We like to think that risk-return profile has changed by drilling a number of projects, number of portfolios, looking at further catalysts from further deal flow, having these management fees get to a stage where we ultimately become self-funding, and with one further deal away from achieving that milestone. And while we're in this game, is ultimately making the studies in that portfolio approach, we think provides an asymmetric return profile to invest at its point in time. So I know it's a very busy event. All I wanted to do was try and emphasise that there's a very different funding model here, and we'd like to think that if you're interested in going through it in more detail, please reach out, and I'm sure Jane and the team will arrange a call. So thank you, everyone.